The markets now, the local index will be playing catch-up this morning after the close of a public holiday yesterday. The JSE will be hoping to benefit from a positive session in global trade, with global markets staging a recovery on Monday from a steep sell-off on Friday. Concerns, though, over rising inflation, aggressive central bank policy and weak U.S. earnings reports, they're putting severe pressure on the global markets. Carmen Mpelwane is portfolio manager at Absa Asset Management, and she joins us now to help us dissect some of what is occurring in the business world. Carmen, good morning to you. Give us a sense of how the markets have opened in early trade.
Morning. So unfortunately, we have opened up in negative territory, down about 30 bips for the all-share index, largely driven by the resources sector. So we're seeing Sibanye and some of the other gold names opening up in negative territory. Retail is up for this morning so far, and banks down as well. We're hoping to see some movement, as you've said, positivity, but I think this week is going to be overshadowed by the FOMC meeting on Wednesday, as well as any potential EU bans on Russian oil.
Yeah, let's talk about gold, which has fallen to a near 2-month low, while oil prices are rising as the EU moves to ban the Russian imports. Talk us through those developments and what sentiment is motivating this kind of action.
Yeah, I think it's largely going to be driven by, number one, Fed tightening. We are looking for 50 bips. That's what the guidance has been given by the governor for this May meeting. However, the concern is around increasing treasury yields. We're seeing that up to 3%, which is the highest since 2018. So lots of concern around that. I think what you're definitely going to see is looking for direction on Wednesday in terms of whether there is more concern around the increasing inflation, number one, and a potential for the next rate hike to be higher than the 50 bips. And actually, traders are probably on the cusp of looking at a 75 bip increase if the risk is to the upside.
Let's talk about Absa's Purchasing Managers Index, which shows that sentiment in the manufacturing sector has fallen to 50.7 index points in the month of April. What is motivating that kind of sentiment?
Yeah. Unfortunately, the KZN floods had a significant impact over the month of April. So we saw lots of manufacturing sites that were shut down and production halted. Whether it was precautionary or because of the floods directly, needless to say, the impact was a reduction in terms of activity, number one. Number two, as well, we experienced stage 4 load shedding over the same month, which, as we well know, has a significant impact on production and manufacturing. To the upside, and surprisingly, we did see the employment index up, which does give an indication that this move in the negative direction is largely driven, or hopefully, by a temporary risk on. Sorry.
Yeah. Let's conclude the conversation with Sibanye Stillwater. On the home front, things are not looking all that well, particularly in the gold sector. But this company, Carmen, now receiving a credit rating upgrade from Moody's. Talk us through those developments.
Yes, I think the key thing to remember is that this is a totally different company to 2013. It's not a single commodity company anymore. You're looking at multinational as well, and this has boded well for the company. We've seen a significant increase in cash generation, largely boosted by increased commodity prices across the board for them. And this has allowed them to, number one, strengthen their balance sheet, as well as improve their liquidity positioning over the period. And because of this, Moody's has given them a credit upgrade with a positive outlook.
Well, that's how the cookie crumbles. Carmen Mpelwane, thank you very much. That's the market update from Carmen Mpelwane. She is portfolio manager at Absa Management.